This is how they'll take control of your money and your freedom without you ever knowing it. It's called Central Bank Digital Currencies, and they're coming very soon to a country near you. What are CBDCs? CBDC stands for Central Bank Digital Currency, and at its simplest level, it's just a digital version of cash that's issued by a country's central bank. Just like physical cash, this new digital currency will be fiat, meaning its value will be backed by the government rather than any commodities such as gold. And unlike cryptocurrencies such as Bitcoin, which are decentralized, a CBDC will be centralized, meaning it will be issued and regulated by a single authority, in this case, the government. You see, over the past few years, many central banks have been secretly developing their own CBDC, and so far, 8 countries have launched a retail CBDC, meaning one that regular people can use for everyday purchases. These include countries like Nigeria, China, the Bahamas, Eastern Caribbean, Cambodia, and most recently, the digital dollar in the United States. So, how exactly do these new digital dollars work? Well, according to the Federal Reserve, it would work very similarly to how your bank account works today. So when you receive a paycheck, instead of depositing it into a bank account with your current bank, you deposit it directly into your Fed account. From there, you could make purchases either online or in person using your digital dollars. And because all transactions are digital, there would be no need for things like credit cards, or even merchants would be able to accept digital dollars directly into their Fed accounts. Now, on the surface, this may seem like a great thing for consumers. After all, the Federal Reserve claims that this would make transactions faster, cheaper, and even more secure. However, once you dig deeper, you realize that there are some serious drawbacks. And even though the Federal Reserve claims that there are only benefits to this new digital currency, that may not actually be true. See, when it comes to security, yes, digital currencies are likely much easier to track and trace than physical cash. But that doesn't necessarily mean that it's safer for you. In fact, in 2021, when China launched the world's first digital currency pilot program, they quickly discovered that citizens were using the digital yuan for purchases that they didn't want the government to know about, such as gambling. In response, Chinese authorities simply blocked those transactions. And if you think this couldn't happen here in the United States, well, think again. You see, even though we don't have a CBDC yet, last year 14 U.S. senators sent a letter to Jerome Powell, the chairman of the Federal Reserve, asking him whether the Fed would enforce policies that discriminate against certain types of purchases. And Powell responded by saying, quote, "It would be our intent to try to make sure that it was technologically interoperable so that people could use it widely." Now, if that doesn't sound like a subtle threat to censor certain types of transactions, I'm not sure what does. The reality is that a CBDC would allow the government to track every single purchase that you make. And with the right technology, they could even go as far as to restrict or even freeze your ability to spend money in certain places. This type of control over your own money might not seem like a big deal if you are someone who does unplan on doing anything the government does want you to do. But what if you suddenly fall out of favor with the regime? Suddenly, your ability to buy necessities could be taken away with the click of a button. And that's exactly what happened to a Canadian pastor named Arthur Pulaski. You see, during the height of the COVID pandemic, Pastor Pulaski used his church to help those in need, providing food, clothing, and other resources to those who were struggling. However, after he began speaking out against vaccine mandates, his bank account was frozen, and he was unable to access his own money for months. And he wasn't alone either. In total, Canadian authorities froze nearly $20 million belonging to 139 different charities, churches, and even an individual. And even after the Supreme Court of Canada ruled that the government had violated his charter rights, his bank account remained closed for almost 2 years. Now imagine a scenario where something like this happens but on a much larger scale. Imagine a CBDC being used to punish people for like what happened to Pastor Paul? Well, unfortunately, this isn't as far-fetched as you might think. In fact, in a recent speech, Jerome Powell himself mentioned that the Federal Reserve was considering ways to limit the use of cash. When asked why, Powell said, "We're always looking at ways to improve the monetary system. And certainly if there were an electronic currency of some kind that people wanted to use, we'd look at it." And while this may sound innocuous enough, the truth is that limiting the use of cash has long been a goal of the WEF and other global elite. For example, in a 2021 article entitled "The Future of Money," the World Economic Forum openly discussed the need to limit private forms of money, such as cryptocurrency and even cash itself. And just last year, European Central Bank President Christine Lagarde said that the ECB is looking into ways to stop people from holding too much cash. But why would the WEF, the ECB, the Federal Reserve, and other global elites want to stop people from holding cash? Well, the answer is simple. Cash is something that they simply can't control. But by forcing everyone into a CBDC, They could monitor and even manipulate your spending habits. In fact, one of the main benefits that the Federal Reserve lists for its digital dollar is its ability to incentivize spending. Here's what they say. The digital dollar would not change the fundamental properties of money. Like cash, it would remain a means of payment, a unit of account, and a store of value. But it could offer additional features that enhance its usefulness, such as interest-bearing accounts and reduced transaction costs. Basically, what they're saying is that a CBDC could be programmed to pay interest when you spend it, making you more likely to spend rather than save. Now, you might be thinking, why would they do something like this? Wouldn't this just lead to hyperinflation? Well, here's the thing. You see, throughout history, there have been countless instances of governments using their currencies to incentivize certain types of spending. For example, during World War II, U.S. soldiers were paid in special currency that could only be spent in post-exchanges. And in modern times, governments around the world have been offering cashback rewards for purchases made with their respective currencies. The idea behind this is simple. By incentivizing certain types of spending, governments can encourage their citizens to spend money in a way that benefits the economy. However, critics argue that this type of manipulation is a slippery slope, and that governments will eventually abuse their power to control the spending habits of their citizens. For example, in 2017, the Dutch government came under fire after it emerged that it had been using a hidden form of censorship. They were paying social media influencers to promote government-friendly content and even threatening to cut off their funding if they didn't comply. Similarly, in 2018, the Indian government shut down the internet in Jammu and Kashmir to prevent protesters from spreading misinformation. And when you consider the fact that a CBDC would give governments unprecedented control over the spending habits of their citizens, it's not hard to see why some worry that this could lead to a future of financial repression. So if you think this sounds scary, you're not alone. In fact, there are plenty of wealthy individuals who are taking steps to protect themselves against the potential risks of a CBDC. For example, since China launched its digital currency pilot program, the rich have been turning to cryptocurrency as a way to preserve their wealth and protect their privacy. And as more and more countries roll out CBDCs, it's likely that we'll see a similar trend here in the United States as well. So what can you do to protect yourself? Well, one option is to turn to precious metals such as gold and silver. Unlike a CBDC, gold and silver are not subject to government manipulation and have been trusted stores of value for thousands of years. Plus, they're also highly liquid assets, meaning they can easily be converted into cash if needed. Of course, precious metals aren't the only option. Other stores of value like fine art, collectibles, and even land have also held their value over time and can also be easily converted into cash if needed. At the end of the day, there are plenty of ways to protect your wealth from government overreach. But one thing is clear, a CBDC would give governments unprecedented control over the spending habits of their citizens. And whether you believe that this is a big deal or not, it's important to be aware of the potential risks so that you can take steps to protect yourself and your family. Thank you for watching. If you enjoyed this video, check out our latest video on the collapse of Silicon Valley Bank and what it means for you. We'll see you there.